What's up, guys? Happy Thursday. Quick post-market recap here for the 29th of September. Another day in the books and another fresh low here for the S&Ps. So, quick look at the board. QQQ down about 3%. HYG down about 1%. The small caps down 2.2. S&Ps down 2. XLK down 2.5. SMH down 3. Google down 2.5. Apple down almost a 5-piece. Tesla down almost 7%, Amazon down about 3%, Nvidia down 4%. So, the selling pressure continues, and the list of problems here for the market, it only gets bigger and bigger. One of the biggest problems right now being the daily chart of Apple. So pretty much, guys, as long as Apple is under 150, we don't have any support here to save it until we're back down there at the June lows. So with today's close around 142, and the June lows down there around 129, that's about 10% downside to those June lows. So the COVID stocks, for example, here's why this is a big problem for the market. If you look at your COVID stocks like Peloton, Pinterest, Zoom, they've already been killed. Right? Peloton goes 170 to 6, that's dead. Pinterest goes from $90 to $23. Things like Teladoc go from $308 to $26. They've all been killed. What we've seen over the last month or so is now they're taking out the big boys. Google is dead. Microsoft has been taken out. Basically the entire semiconductor sector, names like Nvidia, names like AMD, they've all been taken out behind the woodshed, like our pal Old Yeller. So the reason Apple is a problem here is that unlike Google, unlike Microsoft, unlike XLK, the semiconductors, Apple still hasn't made that move down to the June lows. And the implications here of a move down to the June lows for Apple, they're pretty big, guys. Considering the S&Ps and the QQQ, we're kind of fighting for dear life here at support. So here's how you want to look at it. We could bounce tomorrow, we could bounce on Monday. I wouldn't believe that bounce. Meaning I wouldn't buy into it and hold your long positions overnight unless the bulls can get Apple back above 150. And it's a big problem because of the weighting. So if we flip here to ETFDB, here's why Apple is so important. And here's why a move, never mind into a new low, but a move to the recent lows, here's why that could be a bit troublesome for the market. So for starters, if you look at the S&P 500 ETF, and we go to the holdings here. Yeah, etfdb.com. Nice resource. But the S&P 500, right? The market itself. Apple makes up about 8% of the S&P 500. Right? 500 stocks. That one stock makes up about 8%. So it's a big chunk of the S&Ps. If we look at the QQQ, and we pop open the hood and look at these holdings, Apple is 13%. So Apple and Tesla make up almost 20% of the QQQ. XLK, the tech ETF, Apple is 25% of XLK. That's why that's important. The S&Ps have already been spanked. The QQQ's already been spanked. XLK has been spanked twice. But the king of the hill, right, the leader, still hasn't even made a move down to the June lows. And under 150, there's nothing to save us here as far as support. Now I want you guys to look over here at the big three labels. So notice how the 1 hour, 30 minute, and the 15-minute label are red. That means we have our sell signals on those time frames. So now you've taken out key support. You've got a daily squeeze with a histogram shifting negative. We've got that negative moving average cross, which is never good, 21 under the 50. And on the 1 hour, 30 minute, and 15-minute charts, we got some downtrend going. So the problem here is, guys, now that Apple's in an hourly downtrend under 150, this could rally all the way back towards that hourly 21. A normal pop in a downtrend doesn't fix the problems. To make matters worse, I would imagine tomorrow, the 50 SMA here on the hourly chart probably ends up under 150. So in other words, for Apple to get back above 150, we have to cancel out the downtrend on the 15-minute, 30-minute, and the hourly time frame. That's a lot of work for the bulls. So really important stuff here, guys. At a minimum, the break of 150 opens up the door for a flush down towards your June lows. Considering the S&Ps and the Qs are kind of desperately fighting for dear life here at the lows, a 10% pullback from here in Apple would certainly take your S&Ps and your Qs much lower. We would obviously break support. Now also, throw into the mix here, I think equally as important, we'll say equally as important, is Tesla. Tesla has 23% between the current price and the June lows. And now we're starting to see problems in the structure of Tesla. Today we got that negative cross on the daily chart with the 21 EMA under the 50, and that's why the bars go gray. So when my bars are blue, 21 is above the 50. They go gray, you got the opposite. So a negative shift on the daily chart. Fighting for life here at key support at 265, but look at the big 3 indicator. 1 hour, 30-minute, 15-minute sell signal. So if the bulls can't cancel out the downtrend on the 15-minute chart, on the 30-minute chart, and on that hourly chart, the odds would favor we take out 265. Tesla takes out 265, very much like Apple. There's nothing here as far as technical support to save it until you're a good 20% lower down to your June lows. So right now, guys, those 2 names, very, very important. And it's not as if the market looks good. The market looks like it wants to roll over and die. The odds of that happening are so much greater if Apple and Tesla can't clean up their act a bit. So, the only thing the bulls have working in their favor, and I don't think it's enough, like a lot of things have to come together for us to rally here, but the only thing they have working in their favor is that we're pretty oversold. I can promise you that's meaningless if tomorrow Apple's drilling lower and Tesla's breaking 265. And more importantly, guys, we could bounce here a little bit. If that bounce doesn't take Apple back above 150, I would not believe the bounce. Right? Day trade it, maybe you swing trade it for a day or so, but under 150, the path is wide open here for a push towards 130. So a lot of problems here for the market. On top of the issues here with Apple and Tesla, the S&Ps alone, the structure itself just points towards more downside. You got a monthly squeeze under the 21 EMA with the first negative histogram since 2008. You've got a weekly squeeze right at key support, and the last time the weekly squeeze fired short, the SPX pulled back like $500 or $600. $500 or $600 from here takes you back towards like 3K. Right? Erases the whole COVID move. A lot of problems here, guys. So the game plan continues to be get swing short on the rallies. But before I let you go here, we'll look at the recipe. The recipe for a double bottom, and so far it's not coming together. We need the VIX under 30. We need the dollar under 113. We need HYG, which is the junk bonds, back above 73, and we need Apple back above 150. And then we need some bullish trend on the lower time frames. So as far as bullish trend on the lower time frames, again, I don't care how oversold we are. If we can't even cancel out the bearish structure to a 15-minute chart, and what does that mean? If we can't do this again, there was your progress from yesterday. Of course, they gave up all the progress on that gap down this morning, but if the market has any chance of rallying here, you've got to see that kind of shift from the ground up. Daily 4-hour, 2-hour, 1-hour, 30-minute, 15-minute sell signal on the big 3 indicator, that tells you there's a lot of pressure from the top down. So when there's pressure from the top down, our only chance of rallying is to make improvements from the ground up. So if the 15-minute chart can't get back above the 50, if we can't get rid of that 15-minute sell signal, and if we can't get the 21 EMA to cross positively back above the 50, it doesn't matter how oversold we are, we're not going to rally. Then if you look at the volatility index, we're still hanging out above 30. So it doesn't mean that we can't bounce, right? The market bounced like 2% yesterday, but the VIX never broke 30. So bigger picture, be careful swing trading calls until the VIX cracks back under 30. For the junk bonds here, HYG, there would be a lot of relief in the selling pressure, if HYG could get back above previous support, it's 73. Now, if we pop here and previous support turns out to be new resistance, problem for the market. Now, as far as the dollar goes, a little bit of a divergence here today. So the dollar did pull back a bit, and yesterday you could kind of see that correlation. Yesterday the dollar pulls back, the S&Ps, the Qs are up like 2%. The dollar continued to pull back a little bit here today. Didn't do the market any favors. So, I do think the dip in the dollar here, because the trend is so bullish, because we have these daily buy signals, I think the dip here could be limited to a dip down towards that 21 EMA. If the dollar gets down towards that 21 EMA and finds support, because of the strength of this trend, kind of like back here, there's a good chance we trade sideways for a bit, and then we see another push towards the upside. And of course, a big push in the dollar higher would send the market much lower. So it's an improvement, right? As far as we're pulling back a bit. The lower time frames on the big three, they're going neutral, but the structure is just so bullish. So maybe a little bit more downside, but if the dollar isn't blowing through that 21 EMA, it all remains pretty bullish. So there you have it, guys. It's a very tricky spot here. Because we're so oversold, it's a tough spot to want to load the boat on short positions. The only short we have right now is a put debit spread on Snowflake in the Mastery. I would love to be short everything, but it's a tough spot. Tomorrow morning we could gap down under 3,600, and it's game over. We're going to fall apart. If the bulls could get anything going, there's always a chance for a pretty good short squeeze. So I'm being patient, trying to pick my spots wisely, and in tomorrow's video, I'll give you guys a recap of all the trades that we did in the Mastery for the month of September. But as we head into tomorrow, guys, a lot of pressure here on Mama Market. Daily 4-hour, 2-hour, 1-hour, 30-minute, 15-minute sell signals on the S&Ps. And for the QQQ here, daily 4-hour, 2-hour, 1-hour, 30-minute. So as always, guys, I hope you found this video helpful. If you're interested in the Big 3 indicator, the link is in the description as always. You can head to the Slumber website and check that out. And then, of course, if you're interested in trading live with me and accessing the trade alerts, you can head to the website, check out the masteries, and you'll find me down here at the Compounding Growth Mastery. So right now we got the 30-day $7 trial going. You guys can check that out. But otherwise, hope you found this helpful. If you haven't already, do me a favor, hit the like button and the subscribe button. And I look forward to talking to you guys tomorrow night. Best of luck tomorrow, y'all. Keep your heads above water.